Ladies and gentlemen, good day and welcome to Titagarh Wagons Limited Q4 FY22 conference call hosted by ICICI Securities. As a reminder, all participant lines will be in the listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand conference over to Ms. Ashna of ICICI Securities. Thank you and over to you, ma'am.
Thank you, Peter, and good day, everyone. On behalf of ICICI Securities, I would now like to welcome you all for the Q4 FY22 earnings conference call of Titagarh Wagons. The management today is being represented by Mr. Umesh Chaudhary, Vice Chairman and Managing Director, and Mr. Saurabh Singhania, Group Financial Controller. We will start the call with the opening remarks on the results and the outlook by the management. Post that, we can have the Q&A session. I would now like to hand over the call to Mr. Chaudhary for his opening remarks. Thank you, sir. Over to you.
Thank you very much. Very good afternoon, everybody, and thank you very much for joining the earnings call of Titagarh Wagons Limited for FY22. As the presentation has already been uploaded and would be available to you, you have seen the performance of the company. I believe that whatever was kind of discussed, projected or aimed for in terms of items discussed during the earlier conference calls, the company has been able to more or less be on track in all of the all of the aspects. The major developments, the major highlights for the year has been that standalone revenue of the company has been the highest ever in the history of the company. The Indian operations have done reasonably well. Of course, the big development that has happened is post the results of March, which is the company has bagged the highest ever wagon order placed in the history of Indian Railways for a basic value of about 7,800 crore and a total value of 9,000 plus crore, which takes the order backlog to 10,000 crore for the Indian operation in itself and gives a good visibility for the future. The other highlight has been that the first metro coach produced in India for Pune Metro was dispatched from its factory in Uttarpara, and the production has now begun for the metro coaches. As far as the European operation is concerned, the year has been challenging, but a few of the implementation of strategy that has been put into place. One is that the thrust was on execution of the legacy contracts, and while the target was to complete the legacy contracts by March 2022, there has been a little bit of a spillover, and by June 2022, that is Q1 of FY23, all the legacy contracts would be over. The working results of Italy have also been marred because of a couple of one-off exceptional items. One is relating to certain relocation costs and in terms of closure of one site. So the company had multiple sites which were continuously uneconomical, and they have merged the operation site from Tito to Caserta, and a one-off cost has been incurred of about $1 million or so for that. The other is a provision has been created for the claims or extra costs of the end-of-life contracts which have been completed or are being completed. So out of the losses, a total of about 4 million relate to this one-off items, including the extraordinary item. So in a nutshell, otherwise the company in Italy is also picking up. The new orders have started execution. The first train of Catania was put into passenger service, and the company signed the contract for the Rome or the Lazio region for about 280 million euros. With this, the pipeline of the order in Italy is also healthy, and once the legacy contract is removed and the extra costs in terms of multiplicity of sites, etc., is done away with, we believe that this year we should be able to definitely reach EBITDA break-even. So this is an overview as an opening remark from my side, and happy to take questions. Thank you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on the touch-tone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Our first question is from the line of Abhijit Day from Equentis Portfolio Advisors. Please go ahead.
Good evening, sir. Hello.
Yeah, good evening, Mr. Day.
Yeah. Few things, sir. I mean, first of all, congratulations on getting the order from the Indian Railways. It's been a long time coming, and finally, I think the railways have bitten the bullet, and they are now more perhaps more serious about awarding wagon contracts. So I just wanted to know, in terms of this is a very large order. So Texmaco similarly has also got a large order a few days back. So I just wanted to know, I mean, in terms of the margins on this order, because there are no free issue items. So what in your estimate would be the average blended margins over the 3-year contract, I guess, which you have got?
So as I've always maintained that the average blended margin in our business at EBITDA level is 8 to 10%, and okay. Even in this order, with this order, I would say I would maintain the same guidance that in our business an EBITDA margin of between 8 and 10% is something that we would be able to achieve and sustain. Some quarters can be lower, some quarters can be higher in terms of the mix of execution or temporary factors. But on a sustained basis, that is the margin that we will be able to achieve.
No, I was specifically asking about this order, sir. I know it's a very large order in the sense because you will also have some advantage of scale here for this particular order. So don't you think it can be better than your average 8 to 10% margin?
No, I would still say it would be around the same, because in the wagon business, while the scale is important, in order to get the scale, one has to be competitive. So, these are matters which are factored into while making the bid and while doing the pricing strategy and all of that. On one side, one has to keep into mind that there is, this is not a monopoly business. There are competitors, and we have been able to get the largest share. And this, in fact, establishes that last several years in a row, we've been having a market share of about 30%, which is a very good market share in a competitive industry like this, while maintaining our EBITDA margin. So I would not revise either upward or downward the EBITDA margin guidances.
Right. Thank you, and all the best.
Thank you very much. Our next question is from the line of Rajesh Bhandari, an investor. Please go ahead.
Sir, good afternoon. Congratulations for the big order.
Thank you,
sir. Sir, you have mentioned you have asked the railways for some change of wagon type. What exactly is that?
No, we've got two types of wagons, and the two types of wagons that we have got, we are executing both of them.
Okay, but you said you have asked for the change of type.
We had asked them for balancing the two. We have got one wagon type of a certain quantity and the other wagon type of a certain quantity. So at the initial
Roto.
Sorry?
Rota and Roto.
No, this is Boxen and BCN.
Okay.
And we have accepted the mix that the railways wanted to allot to us. So that's already done. We've already signed the contract and we've already started production and dispatches.
And there will be no price implication for that?
No, there will not be.
Okay. And sir, you have received order for 24,117 wagons for 7,800 basic. So it is working out to 32.34 lakhs per wagon. So for this 32.34 lakhs per wagon, the EBITDA margin you said approximately 8 to 10%. What will be the net margin, sir?
So we give the guidance in terms of the EBITDA margins, and that's what I've been able to share with you. In terms of debt, we don't have any long-term debt, so the working capital debt is something that, of course, is an ongoing basis. So normally, if you look at our trend, we've been doing EBITDA margins of about 8 to 10%. Some years they have been a couple of percentages plus or minus, or I would say some quarters rather, some years nahi. But on a blended basis, we would still maintain 8 to 10% of EBITDA margin.
Okay, that is EBITDA. And here, because normally your quarterly turnover in standalone has been 400 CR approximately, so which worked out to approximately 1,500 crores last year you did. But with this big order, you will be executing something about 2,400 crores per year for the wagon itself, this new order. So that should by increasing the turnover, the other cost should come down, sir.
That's what I explained to the gentleman before you, sir, that while pricing the wagons, we take the advantage of the volumes and the advantage of scales and everything, because at the end of the day, in a tender business, you also have to be the competitive bidder in order to get the volume. While doing the pricing strategy and doing the sales strategy, this aspect is already taken into consideration to stay at the 8 to 10% EBITDA margin.
And do we have any PVC clause, sir?
Yeah, the contracts come with the price variation clause, upward and downward.
If the steel prices go down, it may go down also. If it goes up, it may go up also.
That's right.
Okay. And sir, अपना standalone तो ठीक रहता है sir, profits वगैरह, लेकिन consolidated में हमेशा गड़बड़ हो जाता है. So how to improve upon that, sir?
That's what I just explained, that in terms of the so there we need to see the Italian subsidiary in two aspects. So first aspect is the strategic aspect of the company. The company has been strategically a game changer for the group, because it has enabled us to enter into the metro, to the high technology propulsion and all of the other above businesses. In terms of the losses which the company has been incurring, these are losses because of the acquisition of some of the legacy contracts or the initial contracts which were loss making. But there is no cash impact on the standalone, because the standalone is operating on an independent basis. So while on the consolidated P&L the losses are impacting, but there is no cash impact on the standalone in terms of the losses, initial losses that the subsidiary is incurring. There are no guarantees or nothing of that sort.
Okay. Can we expect an increase of something about 40 to 50% in the profits in the next 3 years?
I would not like to comment on that, sir. I've given you the basis, and then the results is something that we will not be able to give any forward-looking numbers.
Okay. Thank you, sir. All the best for the future prospects also.
Thank you, sir.
Thank you. Our next question is from the line of Shubhankar Oja from SKS Capital. Please go ahead.
Yeah, hi. Thanks for the opportunity and congratulations for good set of numbers. I have a couple of questions. In terms of this metro coaches, so what are our pipeline apart from what we are doing right now, this Uttarpara and Pune? What are the bidding pipeline that we have?
So we have a very healthy tender pipeline. We have bid for many contracts, and they are in the pipeline. The demand for the metro coaches is very healthy in the country. The Prime Minister, Honorable Prime Minister, while inaugurating the Pune Metro, had also announced that all the Tier 1 and Tier 2 cities are being planned to be connected by metro. So I would say that the tender pipeline, while the order that we have on hand is only the Pune right now, the tender pipeline is strong and healthy.
And so this Pune, is that a profitable order? I mean, are we going to make a 8 to 10%? I mean, the standard margin that we make, is that project also going to do a similar sort of margin?
So we do not comment on contract by contract profitability because of obvious competitive reasons.
Okay.
But as I have always maintained that the tendering strategy, pricing strategy, everything is done keeping into mind that the company should be profitable to the level of 8 to 10% EBITDA.
Coming to your overseas operations, so basically we did acquire this company back in 2015, 2016. And so how much have we totally invested so far for this in this company? And what are the basically kind of a return, kind of a ROC we generated, and what are the potential earnings for this company for the next 2-3 years?
So the investments that have been made are disclosed as a part of the balance sheet. There is no other investment or guarantee which is prevalent, which is not disclosed in the balance sheet. As far as the earning is concerned, the order book of the company is about 500 million euros as of now. And we expect that in 2022-23 we should be EBITDA positive, and 2023-24 we should be able to turn net positive.
And sir, can you share a similar timeline of execution of this 500 million of order that you have? I mean, like the way you share for the Indian operations?
In a transit business, in a passenger coach business, it is quite different. These are framework contracts. So the execution timelines are more spread out. Not like wagon contract where, we got the contract and we started the execution immediately. So I will not be able to give you an exact schedule, but on a thumb rule basis, the contract for passenger trains are normally executed over 3 to 5 year period, any contract.
3 to 5 years. And so just to cross-check this number, so your Italian operations had a roughly, say, 500 crores of revenue with 40 crores of EBITDA loss and kind of I think 80 crores of net loss. Is that roughly the ballpark number?
Saurabh, would you like to give the exact numbers?
That will be helpful.
Yes, sir. Yeah, for the foreign operations, are you talking about the annual numbers? Or
annual, yes. 19, yeah, FY22, yeah, that's correct.
So in terms of the total revenue for operations was almost like 72 million euros from the foreign operations for the year. and 76 million euros, sorry. And the EBITDA was, if I remove the impact of the exceptional item, it was 1.8 million negative. And also, if I remove the one-time loss of 3.9 million, it will be positive at 1.2 million. And the loss at PBT level was almost at 9 million euro, which is almost like you're saying 72 crores is correct. Yes.
So the reported EBITDA loss would be 1.8 plus, I think you had some 4 million of execution delays provision that you created, right? So that's about 5.86 million euro, right?
The reported EBITDA in the financial statement before, as I said before, exceptional is 1.8 million negative, which includes the impact of 3.9 million of one-time provisions that we have done. And if I include the exceptional item, then the reported EBITDA loss would be almost 3.2 million negative, which is almost like 26 crores on
presentation. I think all of this has been clearly covered. And if there are specific numbers, then we can always be available offline.
No, understood. So basically, we are going to make that reversal of that much, at the EBITDA level, and that's what I was trying to get. What will be the added number to your next year EBITDA from the overseas operations? Thank you so much. Obviously, I'll be in touch.
Thank you, sir.
For any detailed numbers. Thank you.
Thank you. Our next question is from the line of Vasudev from Edelweiss. Please go ahead.
Yeah, thank you for the opportunity, sir, and congratulations on winning the largest ever order from the Indian Railways. So, sir, on the same order, can you elaborate on the delivery terms?
Sure, it is to be delivered over 39 months, sir.
Over 39 months. So, how much then will it be like in FY23 and how much in FY24 and beyond? If you can split it up.
Related to the contract, but more or less it will be, I would say, a little less than equal in the first year, and then the rest will be over the next 2 years. So more or less it's I would say 25 to 30% in the first year and the balance in the next 2 years.
Okay. And the billing would be done based on the number of wagons dispatched, or after like some money is given in advance, or how is the billing cycle about for this contract?
It is the standard billing cycle of the railways that has been followed ever. That there is no advance in their contract.
Okay. Sure, sir. And on the Pune contract, so we are on track, or there could be any delays expected?
No, we barring the COVID delays and etc., we are by and large on track.
Okay, so by when will be executing the full Pune contract, the Pune Metro one?
FY23, the contract will be fully executed.
Okay, so in this year only. Sure, sir. Then on the demand outlook, how is the demand looking from the private sector, and also how is the demand outlook from the DFC wagon ordering perspective?
The wagon orders that have been placed by the railway includes for the DFC. And as far as private wagon outlook is concerned, it continues to be strong. Of course, after the recent move of the railways, of the government to put some export duty on steel and steel-related commodities, there has been a little slowdown on the offtake of private wagons, but I believe that we believe that's temporary, and the private wagon demand continues to be healthy.
Okay, and would it be possible to give the split of the order book in private and public sector?
Beyond what has been shared in the presentation, we will not be able to give further.
Sure. No problem. And just a few data-related points. So, if you can tell me how many wagons have been dispatched in FY22?
Once again, the numbers that have been given in the presentation are the ones that we can disclose in public domain. So that is already there as a part of the presentation that has been uploaded in the on the website of the company.
Okay, sure, no problem. So so on the bid pipeline, so you said that the bid pipeline is healthy. So again, would it be possible to quantify, like, and like how much of orders have we already bidded for? What is our target for FY23, and are we L1 currently in any order?
We shall be making those announcements only when we win a contract. As a matter of policy and in order to avoid speculation, we do not speak about any contract unless it is awarded.
Okay. Sure. And so the last
Mr.
question.
Vasudev, sorry to interrupt. This is the operator. For more questions, please join the queue.
Just one last question, please. Just one last question. Sir, what is the capex that we've done in FY22?
We've done a capex of about close to 100 crores, which has been primarily funded out of internal accruals.
Okay, sure. So that's it from my side. Thank you and all the best.
Thank you very much. Our next question is from the line of Hari Kumar, an investor. Please go ahead.
Congratulations to the management for a good set of Indian numbers. Sir, my first question is regarding the international operations. Am I audible, sir?
Yes, sir.
Yeah. Why is the parent company not supporting the Italian subsidiary and bringing in minority investors, sir? Because it's in a loss and it's in default of loans. Why is it not supporting the Italian subsidiary? And my second question regarding the international operations is, what are the orders in pipeline for the Italian operations?
So, the 2 points that you have mentioned, first part is that regarding support of the Italian subsidiary, the Indian parent is fully supporting the Italian subsidiary, but as far as financial support is concerned, Indian subsidiary has to also take care of, there has been almost a 4x, or if you look at it in the last 3 years, so 3 years ago the average order book size of the company used to be in the vicinity of 600 to 700 crores. Today it is 10,600 crores. So obviously the capital allocation of the parent company has to be made accordingly so as to ensure that the parent company is also executing the orders that it has within itself. The second is, as far as the minority shareholding is concerned, the minority shareholding is more strategic and would be very useful for the future of the Italian company. Both the companies, the Indian and the Italian companies, work independently while utilizing the synergy of each other, but both of them have a complete autonomous and independent working. The other is, you said about the pipeline of business in Italy. So the pipeline of business in Italy is very strong. There is something called the Program of National Reconstruction and Rehabilitation, which has been launched by the government of Italy and the European Union, which entails spending 180 billion euros in infrastructure, out of which almost 40 odd billion will come to our sector. And since Titagarh is a company based out of the south, recently also the announcements that were made by the senior government officials clearly said that companies based out of the south of Italy will be the bigger beneficiaries of the PNRR, the Program of National Reconstruction and Resilience. So we believe that there will be a very, I would say, very optimistic market scenario. The very fact that Titagarh was able to develop and deliver 2 brand new trains in less than 24 months in spite of the COVID period clearly demonstrates its technical prowess. So with that, we think that the company is in a good position to be a part of the PNRR and the railway upgradation process of the Italian railway.
Thank you, sir. And regarding this Indian operations, sir, are we eligible to bid for this Navy corvettes the Defense Department has opened up recently? Navy corvettes, 36,000 crore order.
So I'm not sure about this, whether specifically on this or not, but we have done recently the fast patrol vessel for the Coast Guard, which is in the category of a warship. We did this via the GRSA. This was launched by the Director General of Coast Guard last month. And with the acquisition of the new shipyard, which we have done on the south side of Havra Bridge, we believe that the shipbuilding capabilities of the company would increase in order to do more of sophisticated vessels for the Indian Navy. With regard to the corvette, I would not be able to give you an answer, but I can, if we can get your details and if we are able to share this, we'll definitely share this with you.
About the wheel sets problem, sir, is the company facing any problem?
Wheel sets has been continued to be a problem, but the railways have taken necessary action because the railway board has to effectively deliver the wheel sets to us, or we have to buy the wheel sets from them. So the railway has placed some orders for importing wheel sets, etc. So we believe that the railways have been very proactive in the planning exercise. The very fact that they placed an order for 3 years at one go for freight wagons is a testimony to the forward-looking planning that the railways have started doing.
Thank you, sir. I'll join in the queue for any more questions. Thank you, sir.
Thank you. Our next question is from the line of Panjul Agarwal from Green Portfolio. Please go ahead.
Good afternoon, sir. I understand that company is trying to reduce debt, but in the consolidated cash flow statement, there are short-term borrowings for 95 crores and repayment of long-term borrowings for 103 crores. The company seems to have repaid its long-term loans with short-term borrowings. Sir, what are we doing here? What is the strategy?
Good afternoon, ma'am. Absolutely not. The company is never repaying long-term borrowing with short-term loans. Both are dealt with in completely separate and isolated buckets. The long-term borrowing has reduced over the years, and that has been reduced only out of the working cash flow. The short-term borrowing is basically cash credit limit, and this can be a very kind of a moment of time event, because invoicing typically in the month of March can happen at the later part. There are certain customers that do not pay up in March because they would like to move their payables in April. So the company is very, very cautious about ensuring that there should not be any long-term usage of short-term funds, and you can be sure that that is not the case.
All right. Also, sir, I can see that other expenses have gone up by 55% on year-to-year basis. So can you tell me the nature of these expenses and the reason for the spike?
So other expenses, I would include certain settlements for claims that have happened. Unfortunately, the Director of Finance of the company could not join in because his flight got delayed. He could not land in time. I don't know, Saurav, if you are able to give more breakup, or otherwise we can provide the breakup.
Sorry. In the consolidated, the other expenses have increased because of the justification that we've given in the opening speech of Mr. Chaudhary, that it includes 4 million euros of almost like 35 crores of one-time provision that we've done for the end of life, the legacy contract, for the extra cost from the customers. So that is the major impact from the consolidated perspective from the European operation. For the Indian operations, I mean, there are certain, I think, advances. I need to check for the standalone. Maybe we can come back. For the consolidation, the major increase is because of the 4 million of the provision that we've done.
All right, sir. Apart from this, I wanted to ask that inventory has also increased by 25%. So what is the nature of the inventory and the reasons for being stocked up? And similarly, trade receivables have doubled in standalone statements from 14 crore to 28 crore. So the quality of the trade receivables, and have we already received that amount in the month of April and May?
Ma'am, these are very routine treatments. 14 crore or 28 crore is not a big amount considering the size of the company. And if you look at the turnover of the standalone, it is in terms of number of days not at all a very high amount that we are talking about. I'm not very sure on which numbers that we are talking, but there is the provisioning norms and the way of recognizing these amounts is very strict, and we meticulously follow them. So if there was anything which was doubtful, that would not be appearing in the goods category.
All right, sir. Just one more question. Sir, have we started with the regular production of propulsion systems, and have we received any orders yet?
We have received orders and we have started with trial production.
All right. Thank you, sir.
Thank you. Our next question is from the line of Sriram Ramdas from Green Portfolio PMS. Please go ahead.
Hi, sir. Good evening.
Good evening.
Sir, about these other expenses that the previous candidate has asked, I will send in an email and I will request for the details because I need further explanation on this if you do not mind. Secondly, sir, we have started with the Catania project, right, in Italy, the metro?
Yeah, we've already delivered 4 trains.
Okay. And the legacy contract should be finished by June end, hopefully.
I already mentioned that in the comment.
Okay, sir. And so last question, look, our Italian order book has been increasing, but our revenues, when I look at consolidated passenger stock versus the standalone passenger stock, I'm getting a revenue of only 60 crores for this quarter for the Italian subsidiary. So the revenues have fallen by 60% year-on-year basis. So sir, what is the reason for Italian subsidiary to report lower revenues?
The contracts that we signed have been signed recently, and typically in a passenger train business, the first designing and the production of the first train takes between 18 to 24 months. That is one. The second is that the focus of the company in the last quarter and in the June quarter is to complete the legacy contract, where the revenues are much lesser because these are primarily revamping contracts, not new trains. So therefore, that takes an impact. But unless we are able to complete those contracts, we will not be able to streamline the situation of the company.
Okay. And so lastly, we recently won an award for 24,000 wagons. Now, do we have the current capacity to execute all these orders within the next 3 to 4 years, or do we need to spend anything on capex at the moment?
We by and large have the capacity. Some balancing capacity that will need to be created is being created.
Okay. All right. And how much capex are we expecting? Is it a major figure that we're expecting for capex?
We're not talking of very large amounts at this point of time. So whatever capex will be there will be for the wagon business will be done from the routine maintenance and interest.
Okay. All right. Thank you so much, sir. Thank you.
Thank you. Our next question is from the line of Vaibhav Bajatia from Honesty and Integrity Investment. Please go ahead.
Yeah, sir. Thanks for providing the opportunity. And you can, sorry, I was late to join the call, so you can skip if this question has been asked by somebody else. Just wanted to understand on the new large railway order that we've received, how is the raw material risk pass-through works? I mean, if the steel price rise, who bears the risk and with what lag, and if you can just explain those contours, that would be helpful.
Ladies and gentlemen, we have the line disconnected for the management. Please stay connected while we join him again.
Hello. Hello.
Ladies and gentlemen, we have the line for Mr. Umesh Chaudhary connected. So you can proceed.
Yeah, my apologies. The line suddenly dropped. I don't know why. So I was mentioning that there is a price variation clause in the contract which takes care of both upward and downward movement of steel prices.
Okay. But is it like with some time lag that is there, and for some 3 to 6 months we retain the benefits and we bear the risk, or is it like immediate pass through? How does it work? Is what I was trying to
Normally the time lag is always there by a quarter or so because the wholesale price index takes time to move. But again, that's why I always mention that there is possibility of a quarter to quarter kind of a movement on EBITDA margin, but on a blended basis, that kind of matches up.
Got it. And just broadly on the new order, when we have put in the bid, what kind of margins are we expecting on this order? If you can share that, what is the EBITDA margin that can be expected?
So again, this was discussed that as a company we work with a pricing strategy which gives us about 8 to 10% of EBITDA, and we would continue to work with the same pricing strategy.
Got it, sir. These were the two questions from my side. Thank you. That's it from my side.
Thank you. Our next question is from the line of Karan Mehta from Nizar Securities. Please go ahead.
Hello.
Yes, please.
Yeah. Thank you, sir, for the opportunity. I've got two questions. First, we are undergoing some rescheduling of payment with our creditors in our Italian subsidiary. So if you can throw some light on that and the status of this rescheduling.
This is basically the unsecured creditors in the Italian system. The sundry creditors, if there is a renegotiation of the payment terms of the sundry creditors, it is classified under this head. This is not a reschedulement of the secured debtors.
Okay. And by what time do we expect this renegotiation to be? I mean, if you can just give a broad timeline as to when this matter will get solved.
These are ongoing. These are not long term. So maybe by the next quarter itself it will be done.
Okay. And sir, second is our promoters had infused around euro 20 million in Italian subsidiary in exchange of OFCDs. So how much dilution can this cause? How much dilution of the holding company can be caused by this OFCDs?
No, there is no OFCD infusion. There will be an equity infusion, which will include the equity infusion from the government of Italy.
Okay. So there would be some dilution caused by this, right?
That's right. The dilution will be caused by that, but that is something which, once the final equity structure is defined, how much money will the Italian government put in and third parties put in, it will be defined.
Okay. Fine. Thank you, sir. These were the two questions from my end.
Thank you.
Thank you. Our next question is from the line of Hari Kumar, an investor. Please go ahead.
Yeah, thank you, sir. Can we expect any more orders from this 90,000 wagon orders opened by the Railways Department, sir?
So we've already got 32% of the order placed by the railways. So I think we should be happy with that.
Okay, sir. Any strategy for the export of wagons after the current order tapers off, sir?
So we are definitely working on export market. That is something which is our focus. And we would continue to focus on building. So if you look at the company's overall strategy, I had mentioned in the calls earlier that my focus is to build up a order book. In fact, our target was to build up an order book of 5,000 crores. We have been able to build that reasonably well before time, and that too twice of the target. Now the next target will be to do geographical diversification, and for that purpose we have also opened a small office in the North American market. So we would continue to do geographical diversification of our markets.
And lastly, sir, about this Industry 4, how ahead are we in implementing this strategy, sir, Industry 4?
We are continuously upgrading ourselves, and we keep on putting whatever IT enablement that we can. Our coach plan that has been made is with utilizing Industry 4.0 standards and practices.
Thank you very much, sir, for the kind support.
Thank you. Our next question is from the line of Rajesh Bhandari, an investor. Please go ahead.
Sir, good afternoon. With this new order worth 7,800 crores, our turnover for the 3 years would also be more than doubling up?
Sir, again, we will not be able to give you forward-looking number statements or projections, but we've shared the numbers and the timeline for execution.
Yeah, it is the timeline you have given. So yearly it works out to something about 2,400 crores, which is in addition to say 1,500 crores which we did the just gone by year. So
it will not be in addition, because these are orders that are placed by the railways. Instead of getting a smaller order, we got a larger order this time.
Okay, sir.
Thanks.
Thank you.
Thank you. Ladies and gentlemen, if you would like to ask a question, then please press star and 1 on your telephone keypad. Our next question is from the line of Premal Shah from Pratik Heat Products. Please go ahead.
Good evening, sir. I just have a couple of questions. The value of the legacy contracts which are pending, what is the value of those contracts?
The total contract value, the legacy contract that was residual on the 1st of April was something around 20-30 million euros, which we will target to complete in the current quarter, that is the June quarter.
So after that, there would not be any legacy contract bleeding?
Thereafter, there would be no legacy contract.
And the new contracts which you have already bagged, there are what kind of margins are those going to be working on?
Sorry?
What kind of margins would the new contracts in Italian operations will be after the legacy contract?
So the Italian railway business operates on a smaller EBITDA margin. Normally, the EBITDA target margin in Europe is at about 6-7%. So the new contracts have been booked by us under the normal circumstances. So we would expect to be around that percentage of EBITDA margin.
And the factory shifting that you've done, one of the facilities that you've closed down and moved to the other facility, what kind of an impact would that have overall on the operations?
That will bring about a lot of efficiency in the operation and reduce costs by almost, I would say, the cost that we have incurred, the payback would be less than 1 year.
All right. Thank you, sir. That's about it from my side. Thank you.
Thank you. Our next question is from the line of Ashwani Sharma from ICICI Securities. Please go ahead.
Yeah, good evening and thanks for the opportunity. So I've got a couple of questions. First is, sir, on the metro, while macro looks, very good in terms of opportunity, but if you could give us some, ballpark numbers as far as opportunity is concerned over the next 2 to 3 years, that would be helpful. That's my first question.
Sure. So as far as metros are concerned, these are all tender-based businesses. So to give an order visibility will be difficult, but I can only give you tender visibility. The tender visibility is very high. A lot of metros have already come up and they are continuing to come up. Our company has already, as we speak, bid in a couple of tenders which are ongoing and would continue to bid in the tenders that are going to come up in the future as well.
So which are the states which are highly active in these tenders?
All states. I mean, if you look at Delhi Metro is active, Chennai, Ahmedabad, Bangalore. So there are different states. But will be coming up. So Gorakhpur has been sanctioned. So there would be a number of them that would continue to come up.
Okay. So my second question is on the your traction motor business. If you can update us what is happening over there.
So I already mentioned this, that the trial production in our plant has already started, and we would be into regular production in the next 3 to 6 months time.
We have got any order from?
Yeah, we already have orders, and for that the plant approval and the trial production has already started.
Okay. And my last question is on the large wagon order that we have received. What kind of advance we will get from the railway for this?
There is no advance for the railway contract. The working capital has.
Okay. Yeah. Thanks a lot, sir. Those were my questions.
Thank you. Our next question is from the line of Premal Shah from Pratik Heat Products. Please go ahead.
Yeah, hi. Once again, sir. I'd just like to know what is this Pune Metro contract and what kind of margins is that going to be running at?
I just mentioned this to one of the participants. We do not disclose contract by contract margins for competitive reasons. But what I can share with you is that whenever we are calculating our overall contract or product mix and execution mix, we ensure that we stay with our targeted margins that we have projected to the investors.
Yeah, the only reason I was asking is because in the presentation I could see that the passenger rolling stock, in spite of having a good top line, the margins are negative. So I was just wondering what would be happening going down the line the next 3-4 quarters.
There are fixed costs which are obviously there, which will be continuing. And as I said, that on a overall contract basis, it's not a onerous contract. Otherwise, we would have declared that it is an onerous contract. But then pricing is also strategic. So this is a business that we will have to kind of follow a strategy in order to achieve the larger picture that the larger objective that we are set out to achieve.
Thank you, sir. Thank you.
Ladies and gentlemen, if you would like to ask a question, then please press star and 1 on your telephone keypad. Ladies and gentlemen, if you would like to ask a question, then please press star and 1 on your telephone keypad. As there are no further questions, I would now like to hand the conference over to the management for closing comments.
Thank you very much for all the very insightful questions. I hope I've been able to answer whatever I could, keeping into view the competitive and regulatory framework. I think that on a nutshell, as closing remarks, what I would like to share is that it seems that the company is all set to enter into a different trajectory. Incidentally, this will be the 25th year of the company's incorporation. The company was incorporated in 1997. So it is a very important landmark year for the company, and for it to be having a number of landmark achievements on this year is also very fortuitous. The first metro coach was rolled out this year. The first large contract has been received this year, and also the first warship was launched. So all the three businesses have something to contribute to the 25th year of the company's incorporation. Going forward, we believe that all the three verticals of the business, which have shaped up well, which have their independent management teams, are picking up, and they would continue to deliver as drivers for the growth of the overall company. So I would like to convey my sincere gratitude to everybody, to the employees, to the bankers, and most of all to the investors who have been with the company, who have supported the company, and we really are sure, and we hope that we will be able to take this company to much different and a much greater height in the year to come. Thank you very much.
Thank you. On behalf of ICICI Securities, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.